This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. Let's have a look at our top stories moving the markets. Crypto exchange CoinBase wants the U.S. government to create a new dedicated regulator to oversee the cryptocurrency industry. CoinBase's digital asset policy proposal suggesting Congress pass legislation to industry establish a self-regulatory organization for crypto businesses. Coin stock is up over 5% following reports Coinbase has received more than 1 million signups on their waitlist for their NFT marketplace. Meanwhile, Russian President Vladimir Putin seeing some value in crypto, but before you get too excited, listen to the context. Putin was asked by CNBC whether he thought Bitcoin or other crypto could be used as an alternative to the dollar amid U.S.-imposed dollar-denominated economic sanctions. And while Putin doesn't think crypto can replace the U.S. dollar in settling oil trades yet, he believes crypto has value and may exist as a means of payment. He also hinted that Russia would have no other choice but to move transactions in other currencies should the U.S. continue to use the dollar as a sanction instrument. And finally, China's crackdown on crypto continues. Authorities in China's eastern Zhejiang province busted a mining operation that had set up graphics processing units in a publicly funded facility to mine Bitcoin and Ethereum, according to the province's cyberspace administration. Separately, the largest Bitcoin mining pool by hash rate, Ant Pool, will block internet access from mainland China to comply with Chinese government regulations on crypto mining activities. So amid all that news, let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is climbing toward that $58,000 level that it was spiking over just this hours ago. Right now, trading at $57,895. It's up about 1.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin erasing gains above $58,000 following yesterday's Fed minutes flagging inflation concerns and growing support for a faster unwinding of stimulus. The Fed minutes carried fewer references to inflation being transitory and showed policymakers are worried that price pressures might remain high for longer than previously assumed. CoinDesk's Omkar Gaboli noting that faster tightening would be negative for Bitcoin and liquidity-addicted asset markets in general. The immediate support is seen at $54,000, a level where buyers have consistently stepped in over the past week. Progress above daily highs near $58,500 is needed to negate the relative strength index's bearish divergence and open the doors for new all-time highs. The RSI has decoupled from the rising price since October 6th. The indicator's negative divergence suggests a loss of upward momentum and scope for a pullback. Short-term puts are trading at relatively higher prices than calls, signaling nervousness in the crypto market. All right, and joining us now to discuss is Joshua Lim, head of derivatives at Genesis Global Trading. Welcome there, Joseph. Great to have you on the show. So maybe you could talk about some of the main factors you see as impacting Bitcoin's trajectory right now.
Hey, glad to be here. Yeah, so obviously the biggest story in the news that's kind of dominated investors' attention over the last 2 weeks has been around the slate of ETFs up for approval by the SEC. The first of which is the ProShares futures ETF that is slated for Monday. Basically, if the SEC doesn't really take any action on this, they're expected to launch subsequent to that. So it's almost an implicit approval. I think what we're seeing amongst a lot of investors is that the probability that people are signing to this happening in this go-around is steadily creeping higher. I think for a lot of people, that percentage was maybe closer to 30%. That's what a lot of our customer surveys had indicated kind of 2 weeks ago. I'd say now we've had a couple of indicators that the market is expecting a much higher probability of approval, including the fact that the funding rate for Bitcoin that's indicated by the CME futures, that's the instrument that would be included in the ETF, has widened dramatically, and even beyond sort of the funding levels implied by other derivative exchanges. So it does show some sort of bullishness around the fact that people think that it'll get approved. There is obviously another piece of news which kind of just hit the tape, but there was a tweet from the SEC sort of investor education account.
Yeah,
right. Yeah, that was a big surprise
from the
for
SEC's
investors.
Office of Investor Education and Advocacy. They're saying that before investing in a fund that holds Bitcoin futures contracts, make sure you carefully weigh the potential risks and benefits. Is that kind of a hint, one way or another, that an ETF may be approved?
Yeah, it's kind of a weird way to sort of make that signaling happen right before kind of the Monday deadline. But it does seem, it's a verified account. A lot of people pay attention to that account, and that account has tweeted before about sort of crypto-related topics. So it certainly seems to the market that it's a strong indicator that it will get approved.
Interesting. And do you think that it will be one after the other or all at once? Because obviously, if it were one after the other, they would have major first mover advantage.
Yeah, I mean, they're all sort of bunched together in the middle of October here. So I do think, unless there's some structural deficiency in any one of the applications, I think a lot of them are sort of designed in a very similar way. I think there are a lot of issues that I think, that tweet in particular sort of brought up, which is, the supply of futures on the CME really depends on a lot of people being able to take the short side of that trade and having a lot of US dollar collateral to support those positions. I think there's a lot of newer entrants into the space, especially from the institutional world, that do have the balance sheets to do that.
So
I think a lot of those.
We have a chart on the Bitcoin futures aggregated interest. Maybe we could pull that one up, and maybe you can walk us through what you're seeing here.
Yeah, absolutely. I think this is a really key chart to see kind of how much leverage is embedded in the trading environment. I think you can see even from the sort of end of September, a couple of weeks ago, there was obviously the China ban, which you talked about earlier. There was a lot of fear around, the Fed kind of tapering schedule. And obviously there was the Evergrande episode out of China. There was a lot of uncertainty around where Bitcoin was headed. Bitcoin was around 40,000 at the time. Obviously, we rallied almost $20,000 since then. So there's been a huge expansion in open interest. There's just a lot more leverage since that kind of washout. And in particular on the CME futures, I think CME futures were maybe around $1 billion in open interest just maybe 2 or 3 weeks ago, and now we're seeing it at something like $3 billion, $3.5 billion. So a lot of institutions are using that instrument now to trade.
We also have listed BTC futures annualized on a percentage basis. That chart. How do you compare that one with what we're seeing here?
Yeah, I think the key thing to take away from this chart is just how steep it is in the front, where the cost of this percentage is basically the annualized cost of holding a long position using these futures instruments. You could see that near the front of the curve, both the CME, which is the instrument that would be included in the ETF, and Deribit, which is an offshore derivatives exchange, are very, very elevated. That means a lot of people are using these instruments to go long.
All right. Joshua, we got to end it there, but thank you so much for sharing some of your insights. We're very eagerly anticipating any decision on that Bitcoin futures ETF, if and when that happens. That was Genesis Global Trading Head of Derivatives, Joshua Lim. All right. Well, earlier this year, Japanese exchange bitFlyer had to rein in their margin trading platform due to changes to Japanese regulations. Now they're set up to reopen new registrations for margin trading services. Joining us now to discuss is Kato Takaaki, Global Head of Sales and Trading at Japanese crypto exchange bitFlyer. Hello, Kato. So perhaps maybe we could start off by explaining what happened back in April and May in the Japanese regulatory landscape that led to the limits on leverage trading, which is borrowing funds, in this case, in the trade in the crypto markets, to trade in the crypto markets. So what happened then to lead to this moment now?
So there's been a general trend towards a decline in leverage for both retail and institutional investors. And so there's been incrementally a decline in the amount that they've allowed. So that's been a process that's been ongoing. There was an introduction of a law which basically caused us to have to freeze access to our Lightning FX and futures product. And that's been ongoing for about 1.5 years. But finally, it's been a long wait. It's actually one of the most exciting days of my career here at bitFlyer that we've gotten it registered yesterday, October 14th, as a Type 1 financial instruments business. And this will enable us really to open the doors to our product, which has suffered a serious handicap over this time period.
Mm-hmm. I wonder, are you seeing an influx of users amid China's crackdown on crypto? Are they coming in to Japanese exchanges or surrounding Asian markets?
There's definitely a lot of movement within Asia. So you've got China, but it isn't just China, right? So there's been a crackdown or just in general, which is happening globally. And with that, we have seen a lot of movement. So we have seen an increase in interest. But we haven't been able to offer access to what is now one of the few licensed sort of derivatives products. So just to give you an idea, our Lightning FX product trades about $1 billion a day in terms of average of 2021. So that's relatively significant. And I think at the peak it was about 7.4 billion in a day. So again, we have one of the most liquid products. But given the regulatory environment, how many of them have been licensed? Obviously, that's been somewhat limited. So it's exciting that we're able to provide that going forward.
Mm-hmm. And I wonder if you can give some color on the state of crypto in Japan. For instance, I have the understanding that almost like 100% of the trading activity that goes on in Japan is retail, and there's very little institutional investors involved. Is that correct still?
I wouldn't go as far as say 100. We definitely have our institutional client base, but I would say relative to most exchanges and pools of trading globally, we do have a pretty high percentage of retail. And so that's, I think, an attractive thing for many institutions. So we are looking to expand our institutional capacity. And hopefully, with the FX derivatives, that will obviously lead to a lot more interest in Japan, the BTC JPY pair as well. So.
Mm-hmm. That's interesting because, I mean, in the US, they have a different approach. You usually see institutional investors that can have more of a leveraged and more opportunities in crypto markets versus retail users. Other than that, I'm wondering about the state of Bitcoin in Japan, whether or not right now I believe it's used for payments, but it's not legal tender. Do you see that changing? What is the conversation around that?
We've definitely had conversations with more and more institutions, some corporates as well. So there's definitely people looking into usage of it. And these are coming from some relatively significant companies. I think there's definitely a wait and see approach at this point to see the demand for the usage as a medium of exchange. But what has historically been a very strong retail market, and this probably goes back to our founding in 2014, we have a heavy bias towards it. That's definitely something that's changed, I'd say, in the last 6 months in terms of institutional interest.
All right. Kato, thank you so much for joining us. Congratulations on your latest license and appreciate coming on the show.
You.
That was bitFlyer Global Head of Sales and Trading, Kato Takaaki. All right, that's it for All About Bitcoin. I'm your host, Christine Lee. Join us live tomorrow morning at 9 a.m. for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.